Ladies and gentlemen, welcome to the Midday Market Monitor. In today's video, we have a lot to cover. We're talking about, Nubank ended up doing buybacks. We're talking about Micron seeing some pretty devastating news coming out from semi-analysis, maybe shaking people out of their portfolios. I might be one of them. But I'm not fully sold out of the company. Obviously, there's still a lot higher to go. I'll just say it. I trimmed Micron. I took out my initial cost base. So, my average was around $370. I trimmed that amount out. So now everything that I'm holding is free game. So I'm playing with House's money now. We'll see where it goes from here. But just to be a little bit safe, my fear is that the market will essentially be fearful that the largest component or the largest partner of Micron's, which will be NVIDIA's Vera Rubin platform, is using less of their overall products. It's worrisome to me, and I think that this is not the sort of first part. It's going to be the one that sort of starts the domino. That's my concern, that the real opportunity for Micron is between now and, late 2027. After that, the long-term agreements will make up for a lot of the consistent earnings, but in order for it to continue to grow and have that momentum past the boom, you're going to need, continuous growth. And the fact that these companies will essentially say, hey, you know what? We're changing the designs, even though we're late stage into this process, we can still change it. We're not locked into anything. But yeah. Okay. Tanner, what do you think about the BM&R news? I saw that too, and I'm like, boy, oh boy, does this change the thesis. One of the interesting parts about BM&R was that they were not that there was no possible bankruptcy angle. There's dilution, there's loss of shareholder value by buying Ethereum higher than before, but there was no real cost. The cost came from stock-based compensation, but that is greatly paid for by staking. But whenever you're starting to offer these preferred shares that are paying 9%, that's obviously higher than, the staking rewards that you're going to get out on the other end of like 3.5%. That means that part of the preferred stock, in order to pay those dividends that they want to pay out, has to come from appreciation of Ethereum, and that's not guaranteed. Okay. So didn't like the BM&R news. No. Talk about the SoFi trim. What SoFi trim? I did not trim SoFi at all. Haven't sold a SoFi share. Not one. Yeah, MU is a different company, Micron. What's the new position? Broadcom. This is a invest, then investigate. During the member-only live stream today, I was looking into Micron like a first impressions almost. Only had about 45 minutes to look into it. But essentially, this company is accelerating its growth and likely to go to triple digits based on their AI semiconductor revenue. They're the main company that Google is working with to set up TPUs. TPUs are looking extremely good right here. In fact, so good that they're going to be working potentially with other external clouds, not just Google Cloud, right? Which is, whenever a chip goes from like one CSP to like multiple providers, the chip demand could greatly increase. And Google might be a big proponent of this because that's a brand new line item. Like TPUs could be immediately As surprising as this, like people need to put into perspective how big this industry can be. As essentially, the first year that TPUs launch, it could be bigger than YouTube. Okay. On a revenue perspective, that's not even profitability. It would be a lot more profitable than YouTube. YouTube is, it's not a loss leader. They do make money on YouTube, but it's not a lot. It's very expensive to run YouTube. But yeah, let's see here. Do you think Broadcom will rebound tomorrow? I don't know the timeline of when it's going to potentially come back. I think it's already starting to come back. I think I'm already green on it. Yeah, it's 415. I bought around like 409. And so buying into this company, what I was seeing in my look in the company was an extremely strong CEO. Guidance looked great. However, that's why it got sold off, was weaker than expected, AI growth. But if Hock Tan, the CEO, gets what he wants in terms of his stock-based compensation, he needs to skyrocket AI revenue. If he gets anything under by, I think, 2028 of less than $60 billion annualized, I'm pretty sure, he does not get paid. He gets 0% of his bonus. If he gets that above 120 billion, he gets like a massive payout. So that's the hope, right? I think it's like something like 90 billion, 105, 115, 120, something like this are his tranches. But above 120 billion is like the big hope. He's going to be pushing like crazy. And although, many people may not know Hock Tan, he's been around for an extremely long time. He did not wake up a loser. Okay, this guy has been around the block in almost in every single industry. And the components in the space, the networking, the optics, all of these things, all the components across the board that benefit artificial intelligence, they are in. So it's not just TPUs that, is what I'm hopeful for. OpenAI wants to create their own chips. Like custom ASICs will be around. What percentage of the market? I don't know. What I'm betting on here is that this is an overreaction on earnings, that AI infrastructure proven by Google. Okay, so this is one of the overlaps that I think is super exciting. Google's raising $85 billion. It's up from the original 80. Okay, backed by Berkshire. The large percentage of that money is going to go towards their cloud-based growth, buying data centers. Okay, a lot of that money is going to go to NVIDIA. But the primary supplier of their TPUs, which is not actually their primary chip, surprisingly, that is NVIDIA. But, their homegrown, higher margin chip that they would love to continue to improve is TPU. Companies want to reduce their reliance on NVIDIA, and that pathway is Broadcom. I love NVIDIA. NVIDIA is going to continue to do well. I've got way more money in NVIDIA than I do Broadcom. But why not play both? And very, very interested in increasing my stake in AI infrastructure, and this seems like a more diversified way of doing so. Why not trim Micron for NVIDIA? I have more NVIDIA than I know what to do with. It's a little over 50% of my portfolio. I don't want to continue to add to Micron or to NVIDIA. I have too much NVIDIA. Just joined 5 minutes behind, not concerned about Micron. Yeah. Like I said, I didn't sell out of Micron. I took out my cost base. So, yeah, that's pretty much it. What a good problem to have. Your real portfolio or your public for YouTube portfolio? What does that even mean? What does that mean? I only have a real portfolio. Yeah. What's the new position? Okay, so I'll just wait a little bit till everyone pours in. But let's continue on with some smaller pieces of news. Then we can go back to some of the changes in the portfolio, stuff like this. The official PDT rules are gone in the United States, stopping accounts that are under $25,000 from constantly day trading and limiting ties to intraday trades. That's officially gone. Robinhood, which is super exciting, Hood is up not only because of the potential news that they're going to have more and more customers, but the Trump accounts are doing extremely well. This sort of stuff. They also ended up publishing news that their Rothera. I have to explain Rothera. So they created a joint venture with Susquehanna, a market maker, to essentially create their own version of Kalshi. They were partnered with Kalshi to set up these event trading sites. But whenever you would buy an event contract on Robinhood, you'd have to pay 2 cents. 1 cent to Robinhood, 1 cent to Kalshi. And then that would allow you to buy in. If you wanted to sell early rather than bringing the contract to expiry, you'd have to pay those 2 cents again. So 4 cents per contract. It's a decent amount on a $1 contract each time. You're taking out 4% of your trade if you're buying and selling. So Robinhood saw the opportunity a long time ago, saying that Kalshi is essentially getting more of the cut than what they're worth. And at the time of like the really big, manic spike in event contracts, Robinhood was making up for like 30, potentially even 40% of Kalshi's overall contract volume. It was nuts. So if they have that record, if they have the partnerships with a market maker, they could potentially create their own version of this and keep that margin to themselves, or more in Robinhood's case, end up cutting the cost for the consumer to grow in market share. Robinhood just announced today that they are officially live with Rothera, and you'll be able to trade the World Cup. The World Cup is now trading on Robinhood and Rothera. You'll be able to essentially bet on all the different teams, 100 different matches across North America. Very, very exciting stuff. So event contracts are really interesting because essentially the take rate is, well, at least for Robinhood before, was 1%. If you compare that to options contracts, to crypto, to all these things, that's an extremely high rate. Like not even crypto is paying that high. It was back in the day. It's not anymore. So regardless of if you're trading, $1, $1,000, or $100,000, they take 1%. That's pretty good. And now we'll just see how this essentially evolves for Robinhood's margins and the overall product experience in general. Sports betting is really toxic. It's not sports betting. It's event contracts, ladies and gentlemen. The CFTC sees it differently. I'm kidding. I'm fully aware it's sports betting, but they're not a bookie. Tanner, what sport is the World Cup? I couldn't tell you. No, I see the soccer ball. Okay, I know what the World Cup is. I'm not an idiot. Could I tell you could I name a team in the World Cup? No. Spain? I've got no clue. All these Americans. I'm not even an American. That's just Canadian dum-dums. Okay. They are countries. Dude, how would I know that? How would I know that? I get that you guys are saying Canada is playing. I don't know. Name me a player on the team. Go outside, you'll know. That's no fun. Okay. I sold some Apple today to fund an entry into Broad. No, you didn't, Steve. Come on. You're selling Apple these days? Okay, so now that more people are here, I'll say it again. But I took out my cost base on like the initial money that I originally invested in Micron that averaged out to about 370. I took that all out. I'm now sitting with my remaining profit. I'm playing with house money. That's my version of playing this safe. It's not the first domino that's bothering me. Well, I mean, it literally is, but I'm worried that it is a domino. Micron came out, SemiAnalysis came out and said that NVIDIA is reducing SOCAMM capacity for the Vera Rubins to greatly reduce the cost of ownership for the GPUs. And yeah, it's a big deal, you know? Reducing Rubin NVL72 SOCAMM DRAM capacity from 55 terabytes to 28 terabytes per rack. With most Rubin systems expected for 96 gigawatts of SOCAMMs rather than 192 gigabyte modules. This changes the estimated rack cost from $7.6 million to $6.8 million and reduces the total cost of ownership from $4.16 an hour to $3.90 an hour to run the GPUs. NVIDIA has said that SOCAMM is a $300 billion total addressable market given shortages. It's it goes back to the question of Jensen saying that no bottleneck for them has lasted longer than 2 to 3 years. You know, we've had a massive run up that is driven by actual customer orders, but the market is forward looking. So if the bottleneck clears up, the market is not going to sit around and wait for like the long-term agreements essentially give them a long runway of guaranteed profitability, and those customers will continue to pay those rates. I'm not saying that will change. But if you know that those contracts end and that EPS is going to flatline after that, they're not just going to sit in that and bring the multiple from, 11 times forward up to 22 times forward or 30 times forward earnings. You're not going to continue to bid up the name if you know that the earnings on the company eventually come to a massive blockade. So, well, I do still think that there is a big supply shortage. That's why I'm keeping the high, like a good majority of my shares. It's okay to reduce that risk. Yeah. Let's see. Yes, but Micron's backlog is already sold for the next 2 years. Maybe this will affect it in the future. Yeah, but people are not investing in a company for today's earnings. They are looking forward. I'm like I said, I'm not worried about this domino. I'm worried about we saw Meta end up saying that they're going to live out their current GPUs even longer. That was another domino for the memory space. We ended up seeing that what was his name? Jonathan Ross end up coming out and saying that if memory prices, and he works directly for NVIDIA now, if memory prices stay high, that they're just going to have to find another way around this problem. Like we can't lose our business to pay for someone else's. The stock market doesn't work on logic. That's why NVIDIA is 210. Correct. But you should have some logic. You know, what you're suggesting, or at least this is what I think you're suggesting, is like, hey, it's fine because other people are going to be irrational, so I can continue to be irrational. And I think that's literally called greater fool theory. Like you're saying, like, hey, someone else will be dumber than me and buy it at a dumber price than I will, and so I'm safe. Problem. That's a problem. Okay. For news, buyback program. Mitch, great point here. Nubank is such a consistent winner. And if you guys have been listening to some of the all-in podcast guests that have been on recently, Bill Ackman was just on from Pershing Square, and he was essentially saying that, you know, the quality names can often get sold off as people continue to chase the, you know, really speculative names that might end up having huge pops. And he had followed an exact same trend, or maybe I followed him, but the exact same trend of buying into Google whenever everyone didn't like Google, buying into Meta when people don't like Meta, buying into Microsoft now when people don't like Microsoft, and buying quality names that you can, you know, honestly believe that they will recover over the next 10, 20 years of just consistent growth. Not that it's going to beat the S&P guaranteed this year, but that you can comfortably believe that it'll beat in it like a 5-10 year average or something like this. I love that type of portfolio building. And for Nubank, I think that they are going to be one of the largest. They already are, but I mean, like, I think that they are going to be an unbelievable, like, really, really big standout financial institution. Truly, truly big. They already have 135 million customers in Latin America. The profitability is off the charts. The margins continue to expand. The growth is insane. And yet they're not even remotely tapping in. The really, really fun thing about financial services, and why I've always been big into buying into financial services companies, is that the total addressable market is huge, especially for these holistic financial services companies, the companies that do checking accounts and investing and lending and all of these things. The mortgage space, the personal loan lending, the credit card industry, the deposit base, these industries are tens and tens of trillions in Latin America, hundreds of trillions in America, or in North America. But in LATAM, which is where Nubank subsides, is they're dominating in deposits. They're dominating in payments. They're dominating in credit. The credit health is amazing. And they've sort of been on this path of like just collecting up all this money. And they're putting it back into research and development and constantly, you know, reinvesting into growth. But then they gave this little signal today, as Mitch said. If you guys want to sell off our stock and you don't think that we're, you know, you don't think that we can also play the mature game of returning money back to shareholders, watch us do $1 billion worth of a buyback, which is small today. But they don't really even have stock-based compensation. I mean, they do, but it's like 3% of revenue. Like their stock-based compensation is so small and they're so not dilutive. Although they don't do buybacks, their like total outstanding shares have been flat. In fact, over the last 3 quarters, they've gone down in fully dilutive share count because they're canceling, like options are not being vested. And so the total dilutive share count has actually gone down without buybacks. This is a phenomenal business. I mean, expertly run. David Velez is a 10 out of 10 CEO. I would put him up against everyone. Against everyone. The fact that they are now giving back to shareholders, they're going to continue to grow. They have an unlimited total addressable market, expanding into other countries, investing in minority stakes in businesses all around the world of other banks that they'll essentially help grow as well. I'm not worried about the short-term price of Nubank stock. Okay. This is a long-term position for me. And whenever I mean long-term, I mean like, dude, where's Nubank going to be 10 years from now? Because I think that they're going to be over 200 million, maybe even way higher than that. Maybe over 250 million customers. Average revenue per user climbs up every single quarter. And the cost to serve those customers has stayed flat for years and years and years. That's like truly leveraged growth. Look at the efficiency ratio on Nubank compared to any other financial institution in the world, and you tell me who's higher. Like, it is one of the most expertly ran businesses that you can buy. There is problems. The problems are geopolitical conflict. The problems are you're buying this company in USD, but what they're actually making is Brazilian reals or Mexican pesos or, Colombian pesos. This is the problem with Nubank: is currency conversion, geopolitical risk, any of these sort of things. That is an added pressure that you don't have whenever you're just buying American businesses. Anytime that there's a new president or leader in any of the countries that they operate in, it gets a little bit dicey. Like, hey, can they go into Argentina? They were going to go into Argentina in 2019, and then they backed off because the administration was changing. It was a little bit rocky. I'm not saying there's no bear cases. There's definitely bear cases for Nubank. But Nu is an unbelievable business. I love the company. So love this buyback from them. And, extremely, extremely proud shareholder for multiple years now. I think the first purchase I bought was in January 2024 or even January 2023. I'd have to double check. There was a YouTube video that I put out whenever I purchased it. Nu versus Mercado Pago. Ask anyone who's there. They'll tell you it's Nubank for sure. One is a side project for a company. The other one is their entire business. Nubank versus Mercado Pago is like, I don't know. There's some companies that offer cash management accounts, and then there's other ones that are full-fledged banks. Did you and Steve buy Broadcom? I bought Broadcom. I don't know if he bought Broadcom. I did. I use Mercado Pago in Chile. That's because Nubank isn't there. No, obviously not. Like Mercado Pago, no financial services company is going to win 100% of the market share, right? Robinhood's here. They do an extremely efficient job of offering brokerage services, but we still have Public and IBKR and Webull and, Moomoo and SoFi and, the list goes on and on and on and on and on. And all of those companies have a ton of customers. How many of those are growing faster than Robinhood? Would none be the answer? Maybe IBKR recently. Yeah, he bought Broadcom. Okay, cool. Are you long Broadcom or just trading? Honestly, I'm not sure just yet. I'm doing a little bit of an invest then investigate. So I'm buying on this oversold movement of what I feel like happened today based on the earnings that I perceive as good. I don't know the company as well as I should because I've been looking at it for an hour. But, I know the TPU space. I know, I hear a lot about Broadcom. I hear about OpenAI's projects and Anthropic and all the custom ASIC projects that have essentially come up. Broadcom's the biggest name in that space. All the component sales and everything for the networking, for the optics, for the cybersecurity, all the things that go together, Broadcom's also involved in. So yeah. That's what you said about Micron originally. I also said I was going to trade Micron between, 400 and 800. And I ended up getting my average down to 370 and sold over $1,000. And didn't even fully sell out. I just trimmed a bit. So Micron did way, way, way better than my expectations. That's what I'm saying. Okay, well, I don't. Can you have Jose on to discuss Broadcom? I'd love to. I'd love to hear more about it. How do you research companies? Well, I honestly gave a really good example of how I do that in the members only stream that happened today, looking through Broadcom. So I didn't know much about Broadcom's financials or many of these things. And I think it was a pretty clear look at like 45 minutes of how I just went through that entire business. Yeah. Can I answer this comment? I know many people won't care, but do you like Wise? I think you mean the stock. This is what I'll say. I think the product Wise is unbelievable. Like so good. And usually I like to be a product first investor. Like if people are using it, if I have a reason to believe that they're going to be constantly innovating and being around for a long time, that's usually a really good sign of them, having a really good stake in this world. But Wise's business specifically, I don't want to touch, because what I've found is that they've just constantly lowered the cost of their services, which for me has been amazing. But for them, they've almost like accepted a certain amount of gross margin or like profitability for their business, and they've not expanded that. And so they've constantly made like me operating my business way, way better. The currency conversion is so low. Sending money abroad's super easy. Paying invoice, like for me, I love Wise to use as a Canadian. But I don't know how profitable their business is. They're almost like a non-profit payments company. That's how little they charge, which I'm proud of. Like I'm happy they're doing that, but I don't want to invest in them. Okay. It's like the US compared to Canada. My question just got used for an advertisement. Thank you, Sebastian. I appreciate it. You set me up well. We should play volleyball together sometime. How do you access the member streams? You're setting me up for another advertisement. So essentially, I do a almost hour long. It's about 45 to 50 minutes every day, an hour long or a member only live stream. That's for the people who are on the Future Investing Pro side. So if you guys are interested in that, yeah, we're actually going to have our 100th episode tomorrow. So we've done 100 episodes in a row of going live at 12 to 1 before this live stream. Yeah. Toronto meetup is at August 15th. Steve is going. Matt's going. Amit's going. Tevis is going. We got the YouTube Avengers are all showing up. I got to get Chris Patel there. That's the only one that I haven't gotten confirmation. Trimming Micron, and you're not trimming. Like, for real, just ban that guy. Jose, you're more than welcome to join. But if you can actually come on this stream right now, I bought Broadcom, brother. Can you help me understand what the heck this company's about? What have I gotten myself into? For what price? What price did I get Broadcom at? I think it was 409. I could check. I did a bunch of buying today. I bought a little bit of Meta, a little bit of Microsoft, Broadcom. Let's see what else. But I had Micron money to use. Little one is sleeping. I don't hate the move. Great price. Thanks, buddy. Yeah, there's a link below to either sign up for the meetup or the Future Investing Pro stuff. We actually have a coupon right now to celebrate the 100 member only stream. So it's $100 off right now. It's not actually, like, I call it a membership, but it's not. There's no recurring price. It's just a one-time fee. You ever chat with Jeremy? Not in a while. I'm really good with Jeremy. Like we're on good terms, or but I just he's probably busy. Jose doesn't own Micron. He's not a memory guy. He's probably happy that I trimmed it. Okay, let's continue on. SoFi got access to, or is going to give you access to the SpaceX IPO. I think we knew this. Robinhood's also going to give you access as well. So there's going to be a couple of these companies that end up allowing you to buy in at IPO prices. So if you really expect this thing to pop, remember there is a holding period. They'll charge you extra and not offer you IPO shares if you do end up selling earlier. There is problems there. And just because you ask for 100 shares or something like this doesn't mean you're going to get them. You can ask for a certain amount of shares and they try to divvy it up as evenly as possible. I think for Cerebras, they gave there were a lot of people that I know that asked for 100 shares and they got one share. Yeah. Okay. What are you guys talking about? Is SoFi a long-term position for everyone? I'm not sure about everyone, but it's definitely what do you call it? A long-term position for me. As long as they can continue to grow in market share, I'm happy. They've consistently innovated. I'm happy to see it. Nebius is moving. Let's have a look. By the way, Robinhood up 5% right now. 5%. The markets are turning green. Redwire up 17.4%. Oscar Health is up 15%. Abcellera up 13.9%. Pagaya up nearly 12%. AAOI, man, this company just continues to pump. That's just crazy. Up another 12. Kratos up 7%. Lending Club up 6.5. Pershing Square 6.4. Reddit, dude. Reddit's another one of these names I feel so comfortable in. You either have two types of investors. A good investor that sees the opportunity in Reddit and buys it, or the people who say that it's a woke cesspool and doesn't invest in it in morality. And those are the only two. Smart investors and then the other kind. No, I'm kidding. I'm just joking. But for somebody that, like me, that wants to buy into a business that has a growing user base that is, expanding revenue much faster than total members are coming online, showing all the very similar traits that Meta had shown a long time ago. Their advertisements are doing very well. And now there's a new type of business model, which is essentially that they're offering pre-training, post-training for AI models based on an area that is botless. You're essentially seeing an entire feed of people answering questions, giving human feedback, like that human intuition that Reddit can sell to these mega AI labs. What do they advertise there? Blue hair dye and piercings? There's a lot of money in blue hair dye and piercings. Why do I care? You know? Tanner's the type of dude that would buy an oppressive RoboCop company that hunts him if it makes profit. No, it's like the, Kanye West once said this quote in, actually, I'm not going to say the name of the song because it's not a good name. But he said there's like this, there's two types of, I can't use his words. This is terrible. But essentially, there's two types of people who want to make money or don't want to make money. You can either say, hey, I don't like you, get out of my store, or come in and please buy more. And the second one is where I'm sitting with Reddit. I don't care if they're selling blue hair dye and like, why do I give a crap? I don't care what, and clearly you guys know that it's not blue hair and like, it's not nearly the type of blue sky environment that you guys are painting it out to be. It's regular people. It's a community of whatever people want to talk about, right? It's forums for everything. And in that case, they're going to be selling backpacks and, Amazon stuff, like whatever. It's actually pretty bad. Then don't buy it. But for me, I think Reddit's going to do very well in my portfolio. I love Reddit. I find better answers than ChatGPT. There you go. Okay. Broadcom's the new position. The only thing that I could find for Reddit why it's up so much is that the CEO did in Ask Me Anything on Reddit and was talking about how people don't understand parts of their business. Here's one of the quotes from them. He said, foundation models benefit from Reddit in pre-training, post-training, grounding, and search because our authentic human perspective is increasingly rare. That's why people are increasingly looking to Reddit for real opinions and real experiences, and why Reddit content is the #1 cited source across LLMs. Yeah, it's he also said no other data source can replicate the continuously generated, community curated, preference labeled map of how humans actually communicate and make judgments. These partnerships are meaningful to us and our partners, and it's important for us to have partnerships that capture the value only Reddit can bring. Okay. Gosh, man, I never thought whenever I brought up, like, I bring up Reddit or Meta, and people are like, yeah, I don't use it. It's for boomers. I bring up Reddit, and they're like, that's a terrorist organization. It's like, oh, chill, guys. Chill. I'm not remotely taking a political stance at all. It's just a social media platform. Anyone can create an account. That's how I'm going to look at it. Okay. Is Celsius stock a buy? I don't know much about it, to be honest. Well, like I understand it. I just don't know whether people are buying Kirkland Signature sparkling energy drinks or if they're going to be continuously buying, Celsius. And you could say, hey, Kirkland's only like one area, but Costco is a very, very big customer. Like, I think Costco single-handedly put a lot of dents into Lululemon because they essentially recreated a lot of their products that felt and looked like Lululemon pants for 1/5 the cost. Now, Celsius doesn't have that much of a markup, but if you can save 30% per can, why wouldn't you? What a move on Nebius. Let's see here. Nebius 258. 258 looking great. Wise Group up 3%. Yeah. No, it's a good day in the markets, ladies and gentlemen. Happy to be here. Which of the AI names are working, which aren't? Iren's down 5.5. That's crazy. Well, Iren's down 5.5%, while Nebius is up 2.8%. Why is that? While CoreWeave is down as well? Was there news there? Coherent up 2. Google up nearly 4%. So essentially, that gives back a lot of the, growth ever since that. You can immediately see it right here whenever they announce the 4 billion, or sorry, not 4 billion, 80 billion, and then increase it to $85 billion for their dilution. If you zoom out, we're still fine even year to date. I slept in. I missed AVGO's dip. What is it? Recovered that much? I don't know if this is missing the dip. I mean, you're down 11.9%. But yeah, literally, I think I bought like right around here, like right before this went up, because I was researching it for about 30 minutes and then eventually bought in. I'll tell you guys the exact time. I bought in, where can I see this? 12:38. Guys, literally, I bought here. That's pretty good. I'll take it. Obviously, I could have got better pricing down here, but I didn't know what I didn't know. Random question, but how much of your net worth is invested in the markets? Like 99%. Like a huge amount. I have a small equity stake in my house. I've only had the house for like 3 years, so the mortgage payments early on are mainly interest, or like it's high amount of interest, and then the down payment. I don't use leverage, no. It might not actually be 99%. Like, I don't like, it might be 96% or not. Like, I don't know, but it's definitely above 90%. That's for sure. Shouldn't we pay off our house? Well, my interest rate on my house is like 3%. I don't really care. Am I going to make that up in the markets? The answer is most likely yes. Red Snow, the winner of the giveaway yesterday, becoming a member. I folded the thing in half, but that was the what he won yesterday. Sorry, I bent it in half. But brother got 3 months of Google AI Ultra. How's that treating you now, Red Snow, eh? No more ads on YouTube. Comes with YouTube Premium as well. I still got to throw it out. Good to see you, brother. Yep. You go ahead and scan it. It's used. Why no BlackBerry in the portfolio? I'm too slow. I can't keep up with the young guns in the market. What's the current mortgage rate? I don't know what the like going mortgages are right now. I'm not sure, but I think it's in the 5s. I think. But yeah. Okay. YouTube Premium is different. What does that mean? You don't like it? Or you're saying it's not a part of what I gave him? Don't say something you're going to regret now. The people who told me to pay it off for peace of mind. Pay double your minimum payment or even 3x. Yeah, it is open. I can pay it back faster, but I don't want to. That, like, you know, that money goes into Broadcom and into Micron and into CoreWeave and all of these companies, and they don't have to go up, but I'm a big believer in those businesses. And you know, historically speaking, the market in the last 5 years has done like 13.6% per year. I think I'll likely beat it. That 3% that 3% per year. Peace with dry powder. I don't need peace, dude. Look at my sleep score. I don't need peace. I have peace. The peace is not in the dry powder. The peace is in owning businesses that you actually understand. That's true peace. Peace is holding Nubank and not caring what the market does. You know, the company could go down to 6. I promise you, it would not make me blink. It would not make me blink in terms of my belief in the business. Assuming that it wasn't because of some earnings result. But if it's because of a chief financial officer ended up stepping away, like, brother, this dude's wife could be sick. Like, who knows a lot of people change their roles for a lot of reasons. People step away from work. They want more time with friends and family. He, like, you know, maybe he's made enough money. He just bought a yacht. He wants to take it out on the water every once in a while. Who knows the reason for the CFO leaving? Peace is 3 months of Gemini gift card. Damn right it is. Don't be offended because you didn't win. That was a sick gift. That was a good one. I wish I had more. I wish I had a stack of them. I didn't buy CoreWeave today, no. I bought Meta, Microsoft, Broadcom. I think that's it. Okay. Claude is better. Clud is better. Okay, let's continue on with some new market news, ladies and gentlemen. Okay, so this was just from Amit. Just tweeted out that Palantir CEO Alex Karp at AIP Con 10. Our biggest sales secret is that we want you to go. To the model companies. We hope you go through the process of being sold by them, because when you do, you'll think you feel smarter, but you'll soon realize that they actually don't care about you. They don't want you to understand your business. They want to show you how to make as many tokens as you can use. The real value comes from the ontology that builds with you, understands your business, and actually wants you to win. That's how we sell at Palantir. He's got a way with words, for sure. He didn't trim SoFi. It's just clickbait. Guys, it says trimming Micron. And then the deal that SoFi is offering SpaceX. There's zero clickbait. And then my newest position is Broadcom. What is going on? It's because there's no consequences in this playground. You guys run free with no real supervision. So JWG Dog needs to be set an example of. We need to JWG Dog was banned for trolling. Okay. Let's continue on. Okay. Commas confuse me. Yeah, I know. It's hard reading English. Andrew Yang was talking about potentially a pitch on taxing AI. Tax the AI, tax the robots, stop taxing human workers. I actually don't think that this is that bad of a potential offering. Let's have a listen really quick. But I've said for a long time that I really do believe that tokens will be taxed and that robots will be taxed as well. Let's have a listen.
Last time Andrew Yang joined us on Squawk Box, he suggested it's time to stop taxing labor and start taxing AI instead.
You tend to tax things that you want to discourage and you want less of. And we're going to be in a position where we want to shore up labor in every quarter, in every organization and environment. We should actually try to stop taxing labor because
the agents instead.
Yes,
AI agents.
Exactly, Becky.
Joining us now, Andrew Yang, CEO of Noble Mobile and founder of the Forward Party. It's good to see you. Every day we go back and forth about the two assumptions for AI that we've heard about every other technological revolution. From, no more farmers. Okay, now they're doing this. No more buggy whip makers. Oh, but look at the automotive industry. So we always hear that the disruption is going to pay off. No one necessarily thinks that it could be different. It could be staring us right in the face. But if everything AI does basically is designed to do without humans, how can it possibly not be the most disruptive thing to the labor market ever? Is that what you think will happen at this point?
I do, Joe. And if you look at the numbers, you're going to spend, let's call it even $1 trillion on infrastructure and data centers and the like. You have to get hundreds of billions of dollars in cost savings from corporates. And where is that going to come from? Headcount.
It's got to.
I mean, it's obvious. And the powers that be have said, look, we got to stop talking about kicking workers to the curb because people are starting to hate us. People are protesting data centers. Someone threw a Molotov cocktail and took a shot at Sam Altman's house. So then the message has gone out, look, this is going to be fine for workers, but we know different. It doesn't make any sense. And I'm going to say, too, I run a company, Noble Mobile. The easiest people to fire are the people you haven't hired yet. So are we replacing junior analysts, junior engineers with AI? 100%. And if we are doing that, then I guarantee organizations around the country are doing the exact same thing.
So you just, and I was going to say, but if you tax something, you're going to get less of it. Most people think that. You're saying that's not necessarily a bad thing to get less AI, because the promise of it is in drug development and in, there are cases that can be made that this genie's not going back in the bottle, and it's going to be great in a lot of ways. So we want to go forward with, so should we sacrifice labor to do that?
Look, this is not just me talking. Dario Amodei, the CEO of Anthropic, said, tax us, please. He proposed a 3% token tax. Now, you can argue about what the appropriate level is, but I think that drug is going to get discovered if you
So what do we do with the, that's the other thing. I wanted to ask you, historically, when we have tried to ease the disruption to the old workforce when there's a new technology, when we've tried to design reskilling or job programs, has it ever really worked effectively?
That has been a total bust, Joe.
In the past.
I looked at the success rates of U.S. Government-funded retraining programs for the manufacturing workers in the Midwest, and the general effectiveness rate was 0%. And I know, Becky, it's painful, but if you look at it, what happened was someone would start a certification program in the Midwest, give those certificates to workers, and then shut down. The government would pay that school, the school disappears, and then workers are left with valueless certificates. A lot of those people left the workforce, went on disability, et cetera, et cetera. So, like, saying we're going to retrain workers sounds great as a soundbite, but it doesn't actually
Then what are you going to do with the revenue you raise
policy
from the taxes? What good is it to tax it then if you can't do anything to help the people that are getting displaced?
What we need to do is create incentives for people like me to hire more human beings. So check it out. If I hire a young person, I'm going to pay 7 to 10% in FICA and state unemployment and a bunch of taxes. I'm going to pay another 8 to 11% for their health care. And then that worker is going to be spending 15 to 25% on income taxes. You're talking about almost half of the total money that's getting allocated to that worker. That's not going to the worker. So if you start to lighten those costs and taxes, then people like me hire more people. And this would be the most effective way to get the private market bringing more people into companies and opportunities.
So how do you deal with things like healthcare, which are already unaffordable based on just where we've seen trends to take us?
Yeah, so healthcare is a massive burden on companies that are, essentially like killed before they get started, because there are a lot of talented workers out there that might start a company if they didn't have to provide healthcare to their families through their employers. It's tax on employers from actually hiring people. So you have to get healthcare off of companies, and then you have to try and lower the tax burden.
Universal healthcare?
Sure. I mean, as long as as long as private companies are paying for it, it's terrible for business formation, for job portability, which is a good thing, and for actually hiring.
But it's just that doesn't get at the increasing cost we've seen with healthcare all along.
Well, I'd suggest it would, because what happens is a lot of the...
Okay, we're off the subject a little bit. Yeah, I mean, I do actually think there's going to be some form of robotics / token taxation. I'm just a really big believer that this is going to happen because, like, the companies, we are going to see these multi-billion-dollar companies that have essentially appeared with very, very little, if not, zero employees. And if this trend continues, not saying that it's right or wrong, but that it would be a good case for a new politician to put up and probably get passed through, because people will really, really be worried about their job security. Even though we're seeing a lot of jobs data come out and essentially say jobs data is better than what people expected, but yet the fears are still super high. Couch, how's it going, brother? Okay. Let's see. Let's continue on. See what is new in the markets. Uh-oh, Michael Burry's tweeting. Many seem to have missed that this article doubles as a formal introduction of my mental model for valuation. 6-part series on software and payment stocks. Okay. All right. What are the earnings today? Do we have big earnings? We've got Lululemon. We've got Rubrik tonight. DocuSign. Cool. Service Titan. And 5 IPOs. Quantum, SafePoint Holdings, Liftoff Mobile, Sunshine Silver Mining. Oh my gosh, there's a ton here. Are we in IPO season? Did I miss this? Like, I've been paying attention to some of these really big IPOs, but did I miss that there's like let me see if I can find anything on the IPO market in 2026. Let's see. SpaceX IPO shares will be available through SoFi, SpaceX, Robinhood, or sorry, not SpaceX, sorry. Robinhood, SoFi, Fidelity, E-Trade, Charles Schwab. Nice. Man, I'm really worried about SpaceX. Really worried. Like, that company is essentially going to be immediately put into the NASDAQ 100 and the S&P 500. Nike versus Lulu. I don't wear anything Nike, and I do wear a lot of Lulu products. So just from a standpoint of that, I would say Lulu. I'm wearing Lulu pants right now. Okay. Thoughts on Micron earnings? They're going to be disgustingly good. They're going to be so good, it's going to blow everyone's socks off. That's my thoughts on Micron's earnings. But just like last time, people are not going to care. People are going to worry about guidance. If guidance is strong, it's going to head higher. If guidance is not as strong as what people expect, then yeah. People don't know this about Lululemon. Lululemon is the best brand for men. You guys have never worn a t-shirt until you've worn a Lulu t-shirt, and you've never worn pants until you've worn their pants. I've never tried anything else from them. I'm sure it's also good. Cancer-causing chemicals in Lululemon. Brother, don't go outside. You know? You're the unfun person at the party. Everyone goes, I got hot dogs. And you're like, did you know? And then you start busting out the facts about the pigskin that it's wrapped in, and that if it's charred or if it's slightly burnt, that it's going to cause more carcinogens. Just stay inside. My Lulu pants are not going to give me skin cancer. It's fine. I'm not planning on eating the pants. Tanner, it's time for you to buy Palantir. Where are you right now, Mitt? Is this a sponsored post? I didn't hear where you are, but I've got a feeling, and I think this is a... I bought Microsoft, Meta, and Broadcom today. You're telling me sell all that? I'm at AIP Con. Okay. It must be a good AIP Con then. How many shares? How many? How many shares to go to AIP Con? 11. I'll submit the order right now. I don't know if I could afford the amount of shares that Amit has in Palantir. Oh my gosh. Palantir's at a support level right now. Holy crap, Tanner has no Palantir. That's not necessarily true. I've got a share. Menu buy Lululemon, shop at Sahara too. That is funny. That's genuinely fun. I gotta get my mascara though. Like, come on. Okay. Let's see here. Morningstar came out earlier today. SpaceX investors will get better margin of safety days or weeks after IPO. I think that's true. Buy SpaceX 90 days after IPO. Let me know how that works out. Okay. Show us your Lulus. I did, man. I got the, they're a little in the way. They're just blue, like they're the perfect pants. Dividend Master says, great to see you, Tanner. Thanks, buddy. Okay, I want to see what the heck is going on. Inside Ramp's new $44 billion valuation. Is Ramp going public? Are they coming to Canada? SpaceX comes down to data centers in space. Oh, okay, I got to hear this. My understanding is it still doesn't make a lot of sense to put data centers up in space because the land power shell is still much, much cheaper than blasting a rocket into space. Is that not true?
With us now is Duncan Davidson. He's a partner at Bullpen Capital. Duncan, it's great to see you. I've heard people say that this IPO is like leading lambs to the slaughter for the retail investor. Do you think that there's some truth to that, or is that too extreme?
It's silly. Let me put it this way. Bill Gurley's been talking for years about how tech IPOs underprice and get a big first day pop. Not good. You left money on the table. If this thing were priced at the Morningstar valuation, it would double on the opening. Why go through that? I think this thing is going to get easily closed and will probably go up a little bit in the aftermarket, maybe 15%.
I guess the question I would ask is, for all of those who are excited to get in on this, whether it's the retail investor specifically or anybody else, does the 95 times sales valuation make sense to you?
Well, of course not. But that isn't what this thing's being really valued on. That's just today's metric. This company comes down to data centers in space. That is the big long-term play. If you look at Elon, he's got the best launch system in the world. It's going to get better with Super Heavy. He's got the dominant Starlink that he's launching. So he's turned his space launch into a space service. And he can launch lots of data centers once that thing gets going. And so,
but how do we know that data centers in space, it's fun to talk about, but nobody knows if that's a good business model?
Well, first of all, I have an indirect interest in StarCloud. StarCloud already launched a data center in space and it's got orders for a bunch more. The engineering problems have been solved. And if you think about launching a data center through a polar orbit that floats around the day-night barrier when, with the sun on one side and dark on the other, you could easily make the heat system work. So technically, these things can work. Economically, right now, it's marginal. But think about 2 or 3 years down the road. Super Heavy is going to greatly lower the cost of putting kilograms in space. The US or the world terrestrial data centers aren't really going to get much cheaper, are they? In fact, they might keep on going up in cost for construction, for energy, and so on and so forth. But the space ones are going to start getting cheaper and cheaper. And so I think the case, when you look at Goldman Sachs 2030, the case is really strong for these things.
I mean, I don't know. It feels like it's a pretty, the technology to do it is incredible. The business model feels, a little more home. The fact that you're investing in someone who's already kind of doing this kind of makes that point, doesn't it?
Well, I'll put it this way. If you think about data centers, they really have three big buckets. The biggest, baddest, fastest train LLMs. They always do the latest and greatest. The next level down do all the reasoning or inference. When you ask ChatGPT something, it's got to go give you a good answer and not hallucinate. The next wave, the third bunch, will be agents. Now, if you think about an agent system, it doesn't have to operate at computer speed. It can operate more at human speed. Perfect for data centers in space. And I think a lot of the future demand for data centers is going to be from agent use, not training LLMs and the things we're seeing right now. So economically, it could work. I mean, communication, Starlink has a laser network.
Did I miss who this guy is? Who is this? You know, whenever someone's so certain, you're like, he said agents have to move at human speed, not computer speed. Computer speed. Someone was trying to tell him that, CPUs are slower than GPUs and that they do a task at a time. And he was like, that's like human speed versus computer speed. He's a guy invested in SpaceX. Well, yeah. Yeah, dude, I love the gamer chair in the very nice office. Love his office, and then he's got the gamer like Secret Labs chair in there. I think data centers in space will be big, but his idea of like, we already have them. It's like, all right, we've got like a H100 in space. We don't have a data center in space. All right. Let's see. How do they maintain stuff in space? Dude, that is a really good question. That's genuinely a good question. Because I think people think that, well, like once you set up these data centers, like I was talking about this with Tevis. Here, one sec, I gotta blow my nose. Okay. I was talking about this with Tevis because, he made this claim the other day where he's like, oh, Nebius is a full stack platform and CoreWeave is bare metal. And so this means that, Nebius is better than CoreWeave. But bare metal just means that they're running the software directly off the computers. They're not setting up like virtual machines to have like multiple customers on one computer because they're like large or small customers or something like this. CoreWeave has a ton of software. And I think whenever people say bare metal is like they're just selling the GPUs, there's nothing else, someone else is operating it. And that's not true. CoreWeave has a ton of software. Look at Sunk as an example. It's so good that other customers of other clouds are licensing it from CoreWeave and paying them to use on their GPUs, like for their customers. But I was going to say that one of the reasons that makes CoreWeave as good as it is their monitoring and health of their GPUs. Meta put out this thing. I think I talked about this the other day. But the amount of times that data centers end up failing, it's like constant. It's all the time. You can have faulty GPUs. You can have bad cooling. You have, the chassis ends up interrupting the, pre-training or like really any part can end up going wrong. Where's this Meta thing? I'm trying to find it. There's not a chance I deleted it. So you're saying there's a chance. If I have to go find it, I will. But semi-analysis ended up showing off that, like, it's not like, oh, once somebody has a GB200 set up, that they have equal performance across two different data center providers. An individual prong, like if has your computer ever messed up, you've had to take it in, that could be a single prong in one of the connectors that goes to the GPU, ends up somehow messing up. Okay. That's in one GPU that you have in your computer. Now imagine you have millions with millions of miles of connected wire, like CPUs, GPU, like all the different components that are all going wrong. And then one individual area ends up stop working. How do you even locate that? How do you isolate where the problem even is? This is super hard. This is really, really hard, and it takes like expert engineers at different companies. And the reason why CoreWeave is so good and why customers pay 10 to 15% more than they do at Nebius, which is also a fault that I had with Tevis, and I didn't even bring it up, is he said, like, people are going to pay more for Nebius than CoreWeave because of that full stack solutions. Like, it's not even true. Like, CoreWeave demands a premium that's more on par with the hyperscalers like Microsoft, Google Cloud, and AWS. But it's because of their ability to monitor the health of the data centers, coming up with proprietary software that essentially isolates where the problem's happening and be able to fix it extremely quickly. How the heck do you do that in space? How the heck do you do that in space? But CoreWeave is red and Nebius is green. Okay, so I'm not saying that this is another thing. So while I just said that they demand a higher premium, okay, that's if you're to get two of the exact same customer at the exact same time. And that customer would need a bare metal solution. Meaning, most of the time, an extremely large customer that's buying out the entire computer themselves, right? So you're talking about the OpenAIs, the Anthropics, the Metas, like huge customers that are not buying GPUs by the hour. If this is a small startup, 5-person team, they've got $2 million for their token budget, and they need to use a solution, they're not using CoreWeave. They're going to go to Nebius or one of the hyperscalers because they can offer them like multi-tenancy. Essentially, you're buying part of a computer. you're buying this in small chunks, and they can offer that. That's why Nebius says that they're closer to actually being one of the hyperscalers, is because they can actually offer a ton of different solutions to the full range of customers. They can service a Meta, but that's not with a full stack platform. They're just offering them bare metal, okay? And then they can also offer the small customer a GPU by the hour at spot pricing. So right now, while pricing of GPUs is skyrocketing, Nebius is benefiting from these customers that are paying higher rates because they're not essentially signing these long-term contracts and locking in massive amounts of compute at large discount prices. Essentially, imagine, do you guys have Bulk Barn? Is that even a thing? Is that even a thing for you guys? Imagine the difference between going to Bulk Barn and buying, like, they'll let you buy a penny of something versus going to Costco and you have to buy in bulk. The in bulk is cheaper, but it's also just as good of a business model. Like, you tell me what's the better business model, Costco or Walmart? It's just for different customers. Bulk Barn's like you can buy stuff like candy or seeds or nuts or something like this, but it's by weight. So whatever you buy, it's by weight. If you were to buy an equivalent amount of that weighted item versus going to Costco and buying the exact same thing, Costco would be much cheaper. But also, Costco is not going to let you buy exactly 1 pound or exactly 950 grams of something. Bulk Barn will, but they charge you a premium for that selective price. Costco is bulk. Bulk barn is actually not bulk. You guys have to see Bulk Barn, dude. This is like I'm sure there's an equivalent company in America, but if you guys have never been to a Bulk Barn, like that's like a kid's dream. It's like one of the greatest places ever. You guys don't know what Bulk Barn is? It's just rows and rows of select your quantity. You know, you can just grab as much as you want of anything. I can't really explain it. Yeah, I guess the big Canadian flag in their logo would tell me that this is a Canadian company. But imagine you needed a certain amount of flour. That's the, anyway. Sounds like a health hazard. Yeah, maybe. Okay. It's got a good name. Yeah, there you go. I think CoreWeave will get bought at some point. Maybe. They might be too big. Like, for real, they're already, like, pretty large. Like, someone would need to throw, like, you know, a ton of money to buy this guy, like $200 billion. It would be a lot. Okay. Tanner, trim your NVIDIA position to 30%. I've definitely thought about it. Like, hey, what would I buy today if I ended up trimming NVIDIA? Like, what's the better buy? And I just don't think there is one right now. There's obviously companies that I think could do a lot better than NVIDIA, like CoreWeave. But then the risk is, like, what's the chances that CoreWeave underperforms or goes way, way lower? You know, gets, what do you call it? Innovated away. I think that's also way higher than NVIDIA. So I think it's just a risk reward thing for me. Like, whenever I look at the risk reward of NVIDIA, I feel very, very certain. If no one wants to buy this stock, they'll buy themselves with huge buybacks. Buy 20 pounds of shuffles. Google could buy them. I don't know if they want to. Tanner, sell Micron for Broadcom. Beans, that's exactly what I did today. You're describing the video. You're describing the live stream. I trimmed Micron and I bought Broadcom. Save our SoFi bags, Tanner. Yeah. It's funny. I got so many comments. I made a video and all the comments were like, man, you keep promoting this company and blah, blah, blah. I'm like, okay, one, it's in my portfolio for a reason. Like, if I fell out of love with SoFi, I wouldn't continue to hold it. You know? So obviously, like everyone says it like, oh, Amit's pumping this company that's going down, or Joseph Carlson. It's like, no, we just have faith in these companies the same way that you guys do. You know? So I still believe in SoFi management. I still believe in their total addressable market. And in my video, I specifically said, I don't know if now is the right time if the conflict in Iran is worsening. So it was like the opposite of pumping. I said, hey, I'm going to wait a little bit longer before I start buying the dip. Robinhood is better than SoFi. Thoughts? It might be. I think in a bull market where retail investors, and I don't just mean an AI bull market, I mean like where the rest of the what do you call it? Other sectors are also participating in the rally. Robinhood does very strong in those areas. They're going to constantly innovate. I'm a shareholder of Robinhood. Love Robinhood. But I also think that their earnings are very, very sporadic. They'll have these moments where earnings go up 115%, and then in the latest quarter, or what they ended up expecting for next quarter, it's like way, way, way lower. Like you're probably going to end up seeing growth in the high 20s. Their expenses shot up because the Trump accounts. They're probably not going to see that much return on the Trump accounts for a long time. So there's all these, like it's just a much more sporadic company, where I look at SoFi's business, it's just like practically linear. New members come on at about a 34 to 35% clip. Cross buying goes up. The customer acquisition is essentially flat. It's like what usually gives companies a lot of premium is the consistency in their earnings, but not for SoFi right now. Okay. Nebius 261 still having a great day. Let's have a look at the markets. Nebius, Google, Oracle, Nvidia, all up big today. That looks great. 220 on Nvidia. Even Oracle doing great, man. TSM, also $2.3 trillion business here. Coherent, but Lumentum is red. Coherent's green. Why is that? My understanding is Coherent's a much bigger business than Lumentum. They're in similar spaces, but Lumentum's the much faster growing out of the names. I would probably pick Lumentum than Coherent, but yeah. Okay. Selling SoFi above $31 was the only play. Brother, I agree with you. And I should have sold my Bitcoin at 122,000 and bought it at in 2009 whenever it was first invented. Hindsight's 2020. Like, I can go back and look at the chart and say whenever it was at its all-time high, I should have sold and then bought back whenever it was lower too. No one was saying it at the time. Okay? You don't remember what it felt like. You don't... Not for me. Prove it. Show the proof. Hand it over. I didn't say I acted. Well, I better see some proof. Because I don't know you like that. Post positions in chat. It's just like typed out. Sold. I don't even show family my portfolio. I don't even know you, is the thing. You're an unnamed entity. You could literally Photoshop it between now and whenever you're sending it to me, and you're already like, dude, I don't even show family my portfolio. I'm just asking for the thing where it says that you sold any position around the $31 range. You don't even have to show me. I want as much detail as what you're typing out in chat in a Robinhood screenshot. Well, that's just rude. He's a person. Yeah, I know I'm talking to a human. What I'm saying is that, like, if he's worried that, like I understand not showing your portfolio and you don't want to show family and all of this stuff, but like, am I gonna contact his family? I don't know this person. You don't have to show your identity. Like, you're already anonymous, you know? If he shows that his portfolio is $400, who am I gonna tell? You know? Um okay, let's see. I'm not trying to steal souls or something like this. I'm just saying, like, hindsight's 2020. And all I hear is a bunch of comments coming out as if, like, you guys need to see it from my perspective. Whenever everything's running up, everyone said, like, I see comment, like, there was a comment yesterday that says Micron to $5,000. And then whenever it sells off, it's just going to be 1,000. I told you this company was going back to $200. It's like, no matter what I say, the chat's right. You know? And I see zero proof. It's just 1,000 anonymous people. It's just frustrating. I put myself in this position, of course. It's a easy burden to bear. Talking about investing, sitting at home all day and doing exactly what I love. These are the small, they're good problems to have. I'm a SoFi bag holder. Want to see proof? Yeah, that's funny. Okay. Let's continue on. What are the news stories of the day? Let's go hunting. So did I go through? Palantir and Google are partnering to bring Gemini closer to real enterprise workflows while giving Palantir broader distribution through Google Cloud. We talked about the Micron SOCAMM capacity lowering. That's why I trimmed I took out what I put into the company, my cost base. Apple's overhauled Siri will reportedly use Google Gemini models running on NVIDIA Blackwell 200 chips that Apple owns. Meta Instagram Plus is rolling out globally starting today. This is going to allow people to pay a small fee, an optional subscription that adds premium features for stories, profile customization, and creator-style insights. Instagram will remain free with Plus positioned as an upgrade for users who want more control and customization. Cool. It's like X-verified accounts, I guess. Okay. Let's see what else. I'll put up the SPY really quick. We're almost at 7,600. Not an all-time high. We got to 7,620 the other day. But yeah. Okay. Yeah, Leopold Aschenbronner's biggest position is officially Nebius. That's true. I'm seeing this here. Shopify just said that they're launching integrations with Replit, Manus AI, and VO as well. That's made by Vercel. that you'll be able to build the stores that you want directly through Shopify. So you'll be able to connect your Shopify accounts and begin selling within those app builders. Okay, wait. I also see this report here. Goldman Sachs says SpaceX can grow its AI revenue 100x in 4 years to $322 billion a year. It's the same Goldman Sachs analyst who is leading the SpaceX IPO next week. Okay. 100x in 4 years. If they can do it, I can too. Yeah, I've not heard too much about, like, whenever Cerebras was coming around, it was like, 20x oversubscribed. Have we heard about how much demand there is for SpaceX public shares? I don't think I've seen too much on that. Okay. Let's see what else. Anthropic posted, our internal data shows Claude is accelerating AI development, a possible path to recursive self-improvement or AI autonomously building a more capable successor. It's happening faster than we thought, and the implications deserve greater attention. Oh, gosh. Today, Anthropic engineers on average ship 8x more code per quarter as they did compared to 2021 through 2025. That is insane. Claude Mythos preview. This was 4.5. And then Claude Mythos preview internal access, just a more than doubling. And then a massive shoot up again with Claude Mythos preview once again in Q2. Puts on humans. But it's this sort of stuff, like whenever software ends up going up, I'm like, guys, this is like, we still have new models that are coming out. Like I saw this thing on CNBC, I think it was. Where was this? This guy was coming out talking so much crap about AI the other day. Where was that? I need to find that video. He essentially said, like, these companies like OpenAI and Anthropic are going to zero. I'm pretty sure he called out CoreWeave by name, Nebius. Like, he said, like, these companies are all going to zero. I'd like your thought on, or your opinion on this. Let me try to find it, though. Where was that? Private payroll? No, that wasn't it. Oh gosh, I don't remember the person. He wrote for a newsletter. Was it Primary Research? Primary Research. I gotta find it. If someone knows. Ed Zitron? Yeah, that's what it was. I think that's what it was. Okay, let's have a listen to this really quick. This was, you guys tell me if you agree with this. I clearly did not.
What are the bulls out there getting wrong about AI? Because you've made no secret that you don't see any there.
Yeah. So I think people are conflating a semiconductor rally with an underlying successful business, which doesn't really exist. Anthropic's current revenue growth, which is deeply questionable, and the fact that they leaked profitability, manipulated by Elon Musk, of course, their growth is coming because people cannot measure how much an AI task actually costs. And a couple months ago, Anthropic started charging their enterprise customers the actual token rates. What this has led to is suddenly businesses are going, oh, How much money are we spending? I think it was Uber's COO, Andrew McDonald, said that they're having trouble justifying the AI spend based on the actual return, that one can actually measure it. So you've got a thing where you can't measure the costs and you can't measure the return on investment. What do you call that? You call it a thing without an ROI.
Isn't it, though, safe to say, Ed, like, I think about this, I agree, like, that there is going to be, when there's any new technology, there's a lot of money thrown at something, right? A hot new idea, whatever it is. And that ultimately, like, we've talked with some experts in the AI world, they're saying all of these large language models, not everything's going to exist, because right now it doesn't cost you anything to use it. But at some point there will be a cost and people will start to select what they want to play with. And so is it a case of right now, I mean, at some point there will be some winners, some losers, and we'll see some things filter their way out, and that there will be some return on investment for some of the larger players when it comes to AI? Do you not see some winners and losers in this, or some winners in this?
I think the winner is Jensen Huang, and the winner is the construction firms who have got prepaid for all the data center construction. Maybe Sam Altman and Dario Amodei have become billionaires through this. But when it comes to the actual businesses, you can't find anyone who can measure the ROI because you can't do it. So when it comes down to the model companies themselves, they're horrifyingly unprofitable. I think OpenAI lost like $20-something billion last year. Anthropic's probably not far behind this.
And we don't have access to their books.
Of course. But this is based on
file for an IPO.
Just so we're aware, that's just not true. I'm sure the statement about it being hard to measure is true, but think about whenever you used to put advertisements in the newspaper. You know, whenever it started going online and on the internet and everything like this, it was much easier to measure a return on ad spend. And, you know, whenever you were putting advertisements on billboards and newspapers, it was much harder to find out if you have a direct measurable return. But that didn't mean that it just was nothing. It didn't mean that advertising was worth nothing. And so companies continued to buy, because whenever they did buy, their company sold more products, directly or indirectly. Okay. The same thing is here. You can measure things like the amount of code committed, the amount of new products that are coming online, the speed at which revenue is growing for new products that have been recently released. You can look at the amount of code that's actually being written using artificial intelligence. The rate in which he's stating this as if these are facts rather than unknowns, because even for me, like, I agree that there are definitely unknowns about the amount that we're spending versus the amount that we're getting out. But the fact that he is making it as if these are the things that he knows, it's a little bit jarring, but let's continue.
Yeah, and that's the thing. When we see these S1s, I think it's going to be kind of a massacre, because I think that people have this view that these companies are becoming more profitable or even have a path to profitability, and they don't have one.
But, you know, somebody could say, and Carol, we talk about this all the time, Amazon for years didn't really have profits.
Well, that's the thing.
Now it's a behemoth, and now it's a, you know, then AWS came along, and now it's this juggernaut that, you know, has made a lot of people very wealthy. But
the thing with Amazon is between 2003 and 2017, Amazon Web Services, actually all Amazon CapEx, was around $57 billion normalized for inflation.
Between that whole time?
In that entire time. Wow. And they were cash flow positive in 9. The classic thing with the .com reconciliation thing is, well, things went poorly, but after that, there was useful infrastructure. No such story exists here. GPUs, AI GPUs specifically, have very few other use cases. And on top of that, if you're talking about incomplete data centers, it's going to cost just as much money to finish them today as it will in 10 years. And similarly, a Blackwell, a B200, GB200 rack, NVL72 rack, for example, will cost just as much, if not more, in electricity 10 years from now. There is no...
That's also not true. Like the time it takes to set up data centers for a Blackwell system was about 2 hours per rack. Today, it's for the Vera Rubins, it's 5 minutes. So the speed at which you can set up a data center is obviously much quicker if the time on site is much less. And I don't know what that'll look like in the next generations, but just that alone is cost efficiency. Where's the cost efficiency going to be if robots are doing this, or, you know, whatever the different things are. But like, to just say it's going to be the same, if not more, without giving any benefit to, you know, cost efficiency, is just a crazy stance to make. Am I wrong? Like, tell me if I'm wrong.
Pick up and fix this story. Perhaps there'll be some on-device large language model use, but we are talking an industry that has absorbed over $1 trillion in the last 3 years. The media attention from everyone, and these continual stories about the magic of AI. But when you say, hey, is it making any money? They go, oh, no. Oh, we couldn't possibly. We don't do that yet. But don't worry, Uber lost a lot of money. Uber burned about $32 billion, which is less than half of what Anthropic has raised in the last 6 months.
So
It's true. But Uber is not a $1 trillion company and doing $50 billion of ARR in, you know, a couple of years. They've essentially 10x their revenue. I'm sure Uber's done that 1 year, but not year after year after year after year. It definitely is different. And then on top of that, to say that these companies are just not profitable and they have no path to profitability, you can go on the semi-analysis right now where they talked about how their gross margins on their inference infrastructure has increased from 38% to over 70% over the same period of growing their revenue from January from 9 billion to over 44 billion. This is just from January to today, or actually this article was written back in, you know, almost the beginning of May. Okay. So, and by the way, that's gross margin, but gross margin is the real cost. Okay. After that is growing and trying to keep up, right? Research and development is for future products, not current products. Sales and marketing about finding customers or keeping leads. Yes, that might be very important, but that's not whether or not a company can be profitable. Okay. So gross margins, like the selling of something in terms of the cost of the actual goods, the cost to essentially deliver the product, they are profitable. And I think people harp on this a ton. Like, they look at companies' net income and like early days, whenever companies are super early, and although Anthropic's $1 trillion company, this company started in 2017. Like, started in 2017. They are an early days business. Companies in their early era, whenever you're looking at them in, you know, early stage funding, you are basing them based on gross profit to the amount that people are paying for the business, right? Price to GP. And I think a lot of people, whenever they're looking at public companies, need those businesses to be, you know, they want them to be net income positive. But if you do want them, like Anthropic's going to be even more expensive if by the time you want to wait for them to actually show profitability. You can do that in public markets, but they can go public a lot earlier than that, and you can take advantage of buying an earlier company that might allow you to have more upside.
I think it's safe to say there's a lot of smart investors who are in this, smart companies who are in it, right? I mean, pick your big hyperscaler. They obviously want to be around for a long time. So I'm just like, how do you explain their bets on all of this?
So I have this theory called the Broadcom bubble, which is the hyperscalers are out of hypergrowth ideas. We haven't had a new iPhone. We haven't had a new cloud computing. We haven't really had a new platform that would turn into the next Google search or Amazon Web Services. So they thought that large language models were going to be the panacea, that they were going to be creators of API growth, that they were going to be the new infrastructure play, load up the GPUs, sell access to everyone. The problem is no one checked to make sure any of this was profitable. And we still don't know if GPU compute is actually margin positive, which is crazy considering the amount of money going into it. And when we look at the companies that actually are selling it, CoreWeave, for example, they burn billions of dollars, 20-something billion dollars worth of CapEx this year, about the same amount in debt. And their customers are NVIDIA, OpenAI through Google, OpenAI through Microsoft, and Meta, who does not have an AI strategy. It's very strange, like that Twilight Zone episode with the scary child. Like, we're all trying to pretend that Meta actually has a plan here. They don't have one.
So is Apple kind of smart?
Okay, but why does that matter for CoreWeave? If the customers want to pay CoreWeave, why is that a bad strategy for them? And also, I don't agree with him. You know what I ascribe this to? Is like this. Printed on newspaper. The internet may just be a passing fad as millions give up on it. December 05, 2000. You know, it's like you're seeing all this spend. It's continuously increasing. The the code contributed per person that Anthropic put out. Like, how do you describe that? Like, what does that mean to you? You know, does that mean we're not getting more efficient with these models? A bunch of people, like, there was a comment here from Lawrence. I don't think he answered, unless he did. Let me see. Lawrence in chat said, Tanner, I've been doing this since 1996. You are wrong. And then I said, Lawrence, how? And he hasn't answered. It's like, wrong on what point? Let's see. Okay. It's very selective. What about metaverse and AI glasses? They did disappear. No, sir, you're being selective. You have to look at the business overall. They're growing revenue at 33%, and you're selecting their failures. Like, if the company was decreasing, and I was saying, but look at this small thing that is working, that would be being selective on my side. Meta is constantly improving. The amount of money that they're bringing to the bottom line is constantly improving. The business is growing at the fastest pace in years and years. The business overall. They've completely reworked their back end. So instead of it being like an algorithm written by humans, it's like essentially an algorithm that's running on Muse. You know, I'm not being selective. The company's success and why it's increasing in its growth rate is directly attributable to artificial intelligence. And people don't have to see that. But the reason why Mark Zuckerberg, okay, is willing to put his company on the line is not so then he can give all of his money to NVIDIA. He's seeing it because he sees the direct result of what their spending is doing. Why would all companies just throw their hands up and say, let's give all our money to NVIDIA for no reason? Because Ed Zinston sees it a certain way. Why didn't they consult with this dude before they started spending these trillions of dollars? Let's see. Lawrence, I don't think got back unless I missed the comment. Let me know. It'll be unprofitable as the build out finishes and use case pop up and expand. That's fine as the TAM is massive. Let's continue to have a listen here because I am I do think it's worth a discussion to see, you know, how he thinks about it, which might be right, how I think about it, which might be wrong. But yeah, it's worth listening to.
because we've talked with our Mark Gurman about this, how they've kind of been relying on Google, right, and Gemini, and not necessarily doing
And they're
that
not
big
doing any
spend.
capex on.
No, exactly.
Well, I think what happened with Apple is they released Apple Intelligence, which may be the largest scale anti-tech radicalization in history. My non-tech friends, I've heard nothing about AI from them. Moment Apple Intelligence comes out, they're like, this is the worst thing I've ever used. And I think that made Apple go, maybe not. Maybe we should take a step back. But their capex is minimal. They're spending about as much in capex, ironically, as Amazon was spending on AWS way back when. So I think Apple is cautiously holding back and kind of absorbing the headline after headline, the ridiculous headline of Apple's behind in AI, behind a losing proposition, more like.
We're speaking with Ed Zitron. He's the founder and CEO of Easy Primary Research. He's got the Better Offline podcast. He writes the Where's Your Ed at newsletter. Ed, just so everybody's aware, do you have skin in the game? Are you shorting any of these companies? Do you have a financial interest in what you're talking about?
I invest in words. I love doing the newsletter I do. I think I'm spreading a great deal of financial literacy and of how to pull apart the narratives of these companies. But no, I don't, because the market is irrational. And the market is inherently invested in something that I think is destructive, especially the SpaceX IPO. And OpenAI and Anthropic should not be allowed to go public. They are dangerous, lossy companies that are going to be added to indices that will sink 401ks.
You know, it's interesting that you say this, because I got a text on a group chat today from a friend of mine who's like not happy about the idea that he's, as an index fund investor, he's going to be forced to have to buy SpaceX, for example, which is sort of the subject of yesterday's big take. Everybody should check it out on the Bloomberg terminal. There's a lot we want to get to with you. We only have a couple more minutes. You got to come back and do some more with us. Before you go, what happens if markets, you said markets are irrational right now. If markets become efficient, and I think a lot of people think markets are efficient. If markets view this the way that you're viewing this, what are the repercussions of that bubble bursting?
I think really
quick, I just want to, Kangta here said, the argument seems plausible. Of course, I'm not ruling it out that, the spending could be for naught and the models don't improve, and like the vibe coding of today is not as good of coding as like what a senior engineer could do. It might help in the small, like the small tasks, things that AI knows how to write really great, but the real investment is for the models to come, not the models of today. But honestly, bear arguments almost always sound smart. There's literally like sayings about it. Bears sound smart, bulls make money. It's because you could say, hey, you know what? That is plausible. If the US debt continues to ramp up, like maybe we're no longer going to be the primary currency, But at what point? Like people have been talking about this for 10 years, 20 years. Like the way to have gotten rich in that market, though, was not to do what, Peter Schiff has done, or Ray Dalio talking about the changing world order. And of course, both of those guys sound unbelievably smart, but you would have made a lot more money betting on the S&P 500 than their portfolios. So, I think that it's, of course, plausible, his outcome here. It's just not what the market is showing us. The market is spending more. There's like these handful of companies that have put out these statements that they're saying, hey, we're spending a lot. And actually, we didn't set limits on how much our engineers can spend. And we kind of blew through our budgets for the year back in April. That was Uber's famous press release. And then people went, oh my God, it's the end of token spend because Uber. And it's like, okay, well, 50% of organizations are not spending anything on artificial intelligence. What about them? Like we haven't even talked about the rest of the market, let alone how much they're going to spend once these models improve even further. So what is the narrative? Is there layoffs and people are worried about jobs and UBI is a thing, or is artificial intelligence not worth its spend, and Anthropic and OpenAI have no path to profitability? They both can't be true. And both sound really smart.
majority of gains based on AI success are going away. I think the neo clouds like Iron, CoreWeave, Cypher Mining, and TerraWolf as well, all of them perhaps not going to zero, but they're going to be shells of the corporations they used to.
Didn't say Nebius, though. Huge W for the Nebius crowd.
I actually don't know how CoreWeave survives this. I think NVIDIA is looking for the most aggressive haircut you've ever seen, for example, because they currently are not, the way based on research I've done, it looks like it's taking about 6 to 12 months to install a single quarter's worth of GPUs from NVIDIA. They've yet to put out any kind of guidance about this. They clearly know. But if you go and look at Microsoft, for example, none of the data centers that they have announced have broken ground since 2023 have actually been finished. The Fairwater data centers, they've said that was fully complete. It's not even half complete. It's one of the strangest things I've seen in history. And I think what it is that these companies know that they can get away with it. They know that the SEC scrutiny isn't there. And they also know that the froth is big enough that everyone kind of loses together. It all comes out in the wash when it's proven that there is not a there.
Yeah, every quarter takes, what did he say, 6 to 12 months or something to set up. Why is that even a problem? Like, yeah, they're distributing to a ton of different companies. They can take a while. It's not like you need there's like a single, one lane of traffic, and so everything has to go out and they can't accelerate. It's like, no, you can sell a quarter's worth of GPUs and they can take a while. And then they'll go sell it to this other company while you're working on your data center. We're going to go sell to a different business. Why is that even a problem? As for the exact data centers that he talked about not even being complete or something, I mean, that's, I've got no way of verifying that. Yeah, and didn't he say that NVIDIA at the beginning was the biggest beneficiary, and then he said that NVIDIA is going to see the largest haircut coming forward? Because China can build it in 7 days. Okay. Am I the only one looking at the financials? Look at the active power on Nebius, not contracted power. I'm talking active power across Nebius, CoreWeave, or Google. Like, I think it was Microsoft. Maybe it was AWS. I think they did like 2 gigawatts last quarter. 2 gigawatts of active power last quarter. Dude's just making up shit. Unless the SEC, unless what he said is that all these companies are lying. I mean, I'll bet on a single guy being wrong, then the entire industry is lying. Is the title clickbait? For real, ban that guy. Don't ban him. I'm kidding. No, it's not clickbait. I sold my cost basis of Micron and bought Broadcom. Okay. Let's go ahead and end the stream. Portfolio's doing well. I don't take profits every day, but some days it's not bad too. And hopefully you guys can forgive me, especially the people from the memory crowd. I'm still involved. I'm still here. Yeah, tomorrow is our 100th episode of the member-only live stream. If you guys want to get access to the member-only live streams and everything, I wanted to celebrate the 100th episode so you guys can get $100 off. It's down below. I think the coupon code's live100. Just double check that for me. But yeah, you get Fiscal AI for free, a whole year of Fiscal AI for free. You can upgrade to Fiscal AI Max. It's cheaper than a Max subscription to do it through me than to even like the entire membership plus Fiscal AI Max plus all the live streams plus my portfolio and all the updates and what I'm buying and selling in real time. All of that is cheaper than just buying a Fiscal AI Max subscription, and you get Fiscal AI Max with it. So it's an unbelievable killer deal, and right now only it's $100 off. We almost never do coupons, but I wanted to celebrate. We've done 100 days in a row of live streams, roughly about an hour between 12 and 1 o'clock. So it's just down there. I think it's membership.futureinvesting.pro. Check it out. Thank you all so much for watching. Really do appreciate your time. Seriously, these live streams have been a lot of fun lately, and I appreciate the back and forths on people who differ from me. We can talk it out, and although I talk about banning a lot of people, I don't think we've banned anyone. So the conversations have been really civil and lots of fun. Thank you all so much for watching. Bye for now.